Think we are live yet?
We are.
Hello. Yes, we are live now. Hello and welcome, dear investors, wherever you are. This is me, Thorsten Tiet from Dividend Stocks Cash or Aktienfinder.net, both in German and English, with Chad Luke from Total Growth Investing. And we are talking about dividend stocks. And this time we are talking about dividend stocks during the Corona crisis. It's still a subject which matters a lot of us, or a lot for us as dividend investors. And we made some analysis. We will present these analyses to you. We will show you stocks which took a hit, which made dividend cuts or even suspended their dividend payments at all. We also show you another list of dividend stocks which still increase dividends, which even profit from the Corona pandemic, and we will try to find some common patterns of these stocks to help you to get a better idea and to successfully invest during the Corona pandemic times. We don't know how long this will last. So, hello, Chad.
Hello, Thorsten. How are you doing?
Fine, thank you. It was a long introduction. So you are still sitting in Seattle, I can see. I'm still familiar to your background.
Yeah, and I forgot to put up my screen, so my wife is going to be barking at me. Oh, well. So yeah, the coronavirus has affected the entire world. It really has. And I wanted to share some thoughts on that and share some things that I found. Let me bring my screen in, and we'll talk about some of the hype first. So according to the news, the COVID-19 pandemic has been a complete disaster. And in a lot of ways it has. Infections are going up like crazy. A lot of people are dying. Unemployment is going up like crazy, or at least it did when everything shut down. Our GDP numbers are honestly terrifying, especially here in the US. Productivity is down because people aren't going, as many people are not going to work. But you got to think about it in context, because people still need to eat. People still need to pay their bills. And what we're seeing is a massive change. It's not a complete disaster. It's not an asteroid strike. It's change. So let's look at some of the mixed bag in the statistics and the numbers. And I found this website here, the coronavirus pandemic impact on the environment. And if you go down, we'll share this link. In fact, I will share it in the comments right now. So the United States had a 40% drop in air traffic, which is really bad for the airline companies, which is really bad for the hotel industry, but really good for pollution. 50% decrease in carbon monoxide in New York City, 41% decrease in traffic congestion in my hometown of Seattle. Those are not bad numbers, and they're pretty significant. Carbon emissions in China fell by 25%. So we're looking at change, and it's not all good. Medical waste in China quadrupled to 200 tons per day. Wow. There's a lot of hype about wildlife coming back. So it's a mixed bag, and we need to recognize it's a mixed bag. As far as investments go, which is what the channel's about, which is what the live stream is about, Thorsten and I were talking yesterday, and he ran a query on his database at Aktienfinder. And Thorsten, why don't you talk about what the source of the data was? Go ahead.
As you already mentioned, I made some queries to create two lists, finding the dividend stocks, all about dividend stocks this time, which still increase their dividends with a dynamic dividend growth of at least 10%. So from always taken or the comparison based on the last business year compared to the estimated dividend of the current business year, and then the same for the dividend stocks which have really problems with a dividend cut of at least 50%. So really material dividend decrease, or even these stocks might have cut their dividends completely. So we have created these lists, and maybe you can show the first one exactly. You can even enlarge the list, so
Right.
I can see it better too. Exactly. So what we have in this list, and I think we will also share this list to you for free. We have the ISIN and everything, and we have the industry, and we have the dividend of the last business year. We have the dividend estimated of the running business year, and then we have the increase or decrease. It depends on which list you are looking on. And very important is the sector and the industry. That's very important to detect common patterns. So which sector or industry really has problems these times. We have to be careful when you are going to buy a stock or do your fundamental analysis on this stock. And this should, I think, help you to get an orientation of a better orientation.
So one thing to mention is these lists right now are sorted by market capitalization. So the biggest companies in the world that have been affected, either as winners or losers, are the ones at the top here. So the biggest winner in terms of dividend increase was Tencent in China, and the biggest loser was Walt Disney in the United States in the entertainment industry. Those kind of overshadow a lot of the others because they are so big. 551 billion versus the next one, Visa. And on the loser side, it was 198 billion market cap versus Royal Dutch Shell B at 96 billion. So let's keep that in mind as we're looking at these charts, because the charts are showing total market capitalization within this list that were affected. So let's first look at country. And most of the stocks that you have on your list are from the United States, but there are some some bumps in the data. 7 in Hong Kong, and these are the winners. So 7 countries in Hong Kong, 7 in France, 7 in Russia, 6 in Canada, 5 in Great Britain and China. And it's about the same for losers. So the United States at 61%. I think 61 count. And then Great Britain at 11. So this is affecting companies all over the world.
Yes, exactly. So the numbers are not representative. Why? Because the database has a lot of stocks or covers a lot of stocks from the United States. So, for example, the S&P 500 is completely covered. So the sheer number of stocks from the United States is much larger than the number of many other countries. So that's why, obviously, in the United States, we have a lot of dividend stocks which either cut or still increase their dividend. So the total number is much higher. But as Chad said, it's all companies all over the world affected from this.
Another caveat to put in here is you have 1,074 stocks in your database, and this query pull was taken from your database. There are tens of thousands of stocks out there. So, it may be a representative sample in some ways, but we didn't run any statistical analysis. This is just raw data.
Yes, it is, but it is very, I think, representative for the average investor, because these are the stocks in the database which are of interest for most investors. So most investors are looking for solid companies and not for small caps. So we don't know what happened for small caps. And I think, but I also think additionally that small caps often don't pay dividends at all
A lot of
because
them don't, right?
they simply can't afford it. They still
All right.
need to grow, for example.
So let's look at sectors. So the winners, the stocks that have increased their dividends, this is again by market cap, but the biggest winners, financials, technology, and industrials. These are the sectors of the companies that have increased their dividend between 2 years ago and last year, or the previous business year. So this financials, I'm not really surprised because people are still doing business. People are still transferring money back and forth. And the banks are getting a whole lot of bailout money. So again, so there's that. What else might you say about?
First, I would say we are looking at sectors now.
Yep.
So sectors is the highest level. So it means that within sectors, we have still very different industries. So financial can be a lot of can mean a lot of different stuff. It could be a bank. I think there are even REITs within financial,
Yes.
and there exist different kind of REITs. It could be a stock exchange. It could be a lot of things. So don't be surprised if Chad just said to you that industrials benefited from Corona. And if he makes if he will show you the next slide, I don't know it, but I will think industrials will also show you that also a lot of industrial companies in this sector are losers.
Yes, and here we go.
Exactly. That's what I expected. So the level is still very high of sector. So can be nice overview, but if you are really interested in finding stocks and in finding patterns, then maybe this level is still a little bit too high. Maybe we will see. Yeah?
So the other level that we have is industries. So we can look at industries.
Ah, great! Chat already did it. You already knew that I'm coming with this. Huh?
So let's see. You've got multi-line insurance and broker. These two combined, consumer lending is down, and these are consumer lending. So these are the winners so far. And then here's the losers in industries.
There's a lot of losers, huh? There's a lot of losers.
And there's a lot of diversity in the industry. I mean, there are so many industries underneath each sector. This is, here's entertainment, and honestly, this is Disney. Period.
By market cap, maybe it would have been more clever to group by the sheer number of stocks, because if the market capitalization, if I don't know if Disney is still just one company, and
let's see. I can try and figure that out. If you want to share your screen and share some of the details of some of these, I can try and adjust this to be just numbers.
Okay. I can share my screen, and I will. I'm here. I will entertain you while you try to fix it. But if you won't, then don't worry. Huh? It's not so important to me, because we can show you even on the spreadsheet the common patterns, and basically I, at least on my German blog and on my German YouTube channel, I already talked and wrote a lot about this. So we have the sector and the industry here. I enlarge it for you to better look at. This is a tab with the dividend cuts, with the losers, if you want. And just look at the sector. What do you see here? You see a lot of consumer cyclical. You see industrials, as you already mentioned. You see a lot of energy, I think, energy. So, and I think this is important to get a rough idea about what's going on. So even more general, what we see here is that the sectors hit the worst from the corona pandemic are cyclical in nature. For sure, consumer cyclical is cyclical. It's already contained in the name, but mostly energy is cyclical too. So if the economy goes down, the industry doesn't need so much energy. So energy stocks go down. A lot of industrials also suffer. Fortunately, we have the industry here, so industrial is still very rough. So what kind of industrial? Aerospace, so Boeing, for example, airlines, Southwest Airlines is also industrials, Delta Airlines, so people are not traveling so much anymore. I think that's also very logical. We have some banks, or we have a lot of banks, even they also seem to be hit very hard from the corona outbreak. There's one more bank, then even one more bank and one more bank. There are, from the energy point of view, oil and gas. That's also not so surprising. And this is what I mean with the general pattern. If you understand this, you already won very much, because what it is all about is not to invest in dividend stocks because they shine with a very high dividend yield, because it's basically the problem. If you look into a screener or on a website giving you financial information, then mostly the dividend you see is the dividend yield of the past. I call it the paper dividend yield versus a forward dividend yield, but mostly it's this one. The stock market already sent the stock price down. The dividend yield on paper goes up, and this might attract the investor, and you need to be aware of this danger. And then we have these dividend increases. That's the other side. But meanwhile, I can ask, oh, no, chat is still busy, I see. So we have these dividend increases. We are also now trying to reveal this pattern, which are the winners, or which are just the companies coping better with the corona pandemic. What do we see here? What kind of sectors? There we have some technology. You see here, technology. We have still consumer cyclical that might be interesting. We even have restaurants and bars. We have Starbucks here. And I wouldn't say that Starbucks is a winner from the corona pandemic. So I'm sure they had to close a lot of bars and restaurants, and still they increase dividends. You can see here the capital gains. That's year to date, and then you here see they basically lost 40% in market capitalization. So they are not a winner, but still they increase dividends by nearly 50%. So that's also a lesson to learn. You can't just look at the sector and the industry and say this stock did fine, this stock will cut its dividend. That doesn't work this way. It's just to give you an orientation, but it's a very useful orientation. So, Chad, were you able to fix or to improve it?
I think so. There's a couple. Let me see here. So sectors. This should now be by count. Well, okay. I've got this filtered now. One of the things that we can do with this list is we can isolate it down one sector at a time. So you were just looking at Starbucks, which is in consumer cyclical. So let's bring up all of the consumer cyclicals in the winners and sort it by industry so we can see which of those industries are affected. So here's entertainment production. Here's Nintendo, Vivendi, and Viacom. Restaurants and bars. Here's Starbucks, but also Yum Brands and Domino's Pizza. These were all winners. They increased their dividends. So,
But from the capital gains,
yeah, you gotta hedge the winners thing, because you were saying that we can say that Starbucks is a winner when it comes to dividend increases, because they increased their dividend 14.58% from 144 to 165, but at the same time, since the beginning of the year, they have dropped 14%.
exact. And the other restaurant stocks, I can't see it. It's too small for me on the screen.
Well, let me see. I can increase this a little bit. So the one big winner was Domino's Pizza, because everybody's ordering out. They had an increase in dividend from 2.6 to 3.9 for an 18.85% increase. And they've done really well. Since the beginning of the year, their stock price has increased 32%.
Okay. That's interesting.
Now, one caveat in here, I was looking at the numbers, and Shimano in Japan. Let's look at Shimano on Dividend Stocks Cash, because this is an interesting story. The data that you pulled said that they increased their dividend from 12.5 to 160, which is a really big increase. But if you look at the actual data, it's kind of tricky, because they didn't increase their dividend. They just switched how they were paying it from special dividends to regular dividends. But you can see overall, the dividends is pretty flat.
Yeah, exactly. That's a special case.
Yeah.
It's even one level more special than you might think. You just selected a very special stock. This in the estimates, I think they still will continue to pay special dividends, but in the estimates we cannot separate between special dividends and regular dividends. And for the dividend increase in my query, I only considered regular dividends. Right. I think normally that's the way to go. Normally.
Okay. And look at the stock price. They went sideways from 2014 all the way to the pandemic crash, and then they've shot up really high.
And can you explain us why?
No.
because people are enjoying the fresh air now, as you explained, and ordering more bikes. So Shimano makes a better business out of it. I have no idea about that.
I don't know. Well, your industry group on here is hotels and entertainment, and I'm not sure what else they do.
I know them from biking, but
okay.
Maybe they do several things at all. Maybe it's a conglomerate. I don't know. But it's interesting if you enter the screener. Then I think people are also a question which is also really of interest is to know if the dividend cuts were avoidable or not. So if they really came as a surprise, you can make your life easy and say, okay, the corona pandemic, it came out of nowhere. It came from China, obviously, but basically it came out of nowhere without warning, like the things Stephen King does. And it's not my fault. It was bad luck that in my portfolio, half of my positions got a dividend cut. But maybe it's not only bad luck, because some portfolios perform better, also dividend portfolios, while some portfolios perform worse. So we can just chat, enter dividend cuts, and then look at some of these stocks. Mm-hmm. And then you and me, we can give our opinion if it was just bad luck if you owned the stock, or if it really came out from nowhere.
Well, let's take a look at the charts after I've adjusted for counts instead of market cap. So here's the industries of the winners, and it's all over the map. All kinds of things. The ones highlighted here are the largest. The largest winner, believe it or not, oil and gas exploration and production.
You need to show your beautiful
I
graph.
did. I'm sorry. There we go. So here's the chart. This is industries of the winners, and I also have industries of the losers, and integrated oil and gas is up here. So it's really a mixed bag, even within industries. So restaurants and bars, 2%, 3 of the companies on this list out of 149 are winners. They increased their dividends. And let's see, restaurants and bars, 6 of them dropped their dividend.
Okay, we will have to say that if we try to divide by winners and losing using the dividends, capital gains would be better, basically. It's just now that I understood this.
Agreed.
Because dividends are lagging always behind. So management tries to keep up, still pay dividends, especially American US stock or US management, while capital gains show you directly how the company did. I don't require you to change the charts.
No, that'll take a little longer.
I think it might be too stressful. I just wanted to point this out.
Yeah.
And then additionally, as you already explained, Chad, with Domino and Starbucks, that Domino is in the same industry as Starbucks, but it managed the situation better if they allowed people, or if you made still a lot of revenues by just taking the orders and making home delivery, for example.
Domino's Pizza has always been in the food delivery business, so they were already prepared for this. They just needed to make sure that their employees within the restaurants were actually safe. As soon as that was confirmed, then it was business as usual for them, and they went completely nuts because they started getting orders from all over the place, at least from everybody who had money.
From you too, huh?
I've got my favorite restaurant, and it's not Domino's Pizza, and it's I focus more on local restaurants because my community is really important to me. But nice. Yes, we have been ordering pizza.
Okay. And then they have other industries where it's really where the picture is really clear. For example, aerospace, airlines, and all this. There we have just losers.
Yeah.
So that the picture is very clear. In all industries related to tourism, it's the same.
So let me share my screen again, and we'll take a look at aerospace and defense. So all of these dropped their dividends, but let's go over here, and they also lost quite a bit in capital gains.
Exactly.
So, well, let's see. We can sort by capital gains loss. So for the losers, let's take a look. And who was the biggest winner within the losers? BYD company. It dropped its dividend by 50%, but its stock price has increased 102% since the beginning of the year. On the opposite end, we had a dividend drop for Go Ahead Group out of Great Britain, passenger transportation, from a dividend of $1.02 to 36 cents, and their stock price dropped 73% since the beginning of the year. So
it's British pence, exactly.
Right. And let's do the same thing with winners. We can just really quick take a look at the outliers. So Polyrus Miner in Russia, they increased their dividend significantly, and their stock price has gone up 155%. And at the other end, Diamondback Oil and Gas, they've increased their dividends, but their stock price has completely tanked at 55% down. So it's really interesting to see the balancing mechanism of the markets themselves.
Exactly. Yeah, and with the capital gains, you can really see this very fast. Maybe to get a little bit of interactivity with our dear viewers, my idea is that we look into some stocks to see if the dividend cut came out of nowhere, or if it was not clearly obvious, but if they came of no surprise. And I invite you to write comments about stocks. If you know stock which cut its dividend during the Corona pandemic, so within this year, then just write it into the comment. We can have a look at this stock, and then Chad and me, we will just do a little fundamental analysis using our screener, and then we give you our impression if it came out of nowhere or if it was not a surprise.
While we're waiting for some of the comments, you mentioned that your portfolio had dropped in dividends significantly.
My portfolio?
Well, didn't it, or did it not?
No.
No. Good. Mine did.
maybe. I was drunken when I talked with you last time, or what?
No. Maybe I
No,
misunderstood. But I can say that my portfolio completely crashed.
Okay.
And that's because the strategy that I was using was high dividends. I was hunting for high dividends for probably 10 years, and most of the stocks that I had that I'd bought because the dividend was between 5, 10, 15%, it was a wake-up call for me. And it's one of the reasons why I started Total Growth Investing, is because I realized that my strategy needed adjustment. Otherwise, I was going to lose even more. So I started focusing on fundamentals. I started looking at actual growth and ignoring the current yield. And suddenly my portfolio is doing fine.
Congratulations. I also made lot of these mistakes, but it's already a little bit more in the past than maybe in your case, because I'm longer investing in the stock market. It's a typical errors the beginners make. So we have the first stock to look at, and it's Adidas. Do you know that?
Adidas is a shoe company.
Exactly. Do you wear that? Okay, let's remove it, and we will look at it. Who's doing it? You or me? Presenting Adidas?
Go ahead and present it on Dividends on
the screen.
On yours, and I'll take a look at Seeking Alpha.
Okay, here we go. I need to load the screener, and then we'll have a look at Adidas, of course. I can say you that is, from the long-term perspective, a highly successful company very soon. It's a little bit like Nike. People always ask, shall I buy, Nike or Adidas? I don't know. So I think that people from the United States will always buy Nike because they are not they don't know so much as you, Chad. But if you are from Germany, then you know that Adidas is an alternative to Nike. Wait.
And Adidas is based in Germany.
It's based in Germany, exactly. So dividend yield is 1.5. Where is the dividend cut? You see the dividend cut here. Let me just change the layout. And then here you see last dividend. If you look at the last 12 months, then we still have 3.85 euro, but they will be cut to 2 euro. So it's a dividend cut by about 40%. Did it came out of nowhere? So that's the question now. And let's have a look first just at the bare fundamentals. Get an idea without any matrix, just looking at the long-term growth of the earnings. And it's always interesting if we know that the last economic crisis were here during the financial crisis, and then here when the dot-com bubble got the burst. And what's interesting here is during the financial crisis, we see that the earnings went down from 50 cents no, where is it, right? From €3 to 122, so about a third. Then we will have to verify if it was really the business which went down or if it was something artificial. So let's have a look at the operating cash flow. When we see now the operating cash flow, it went up. So, and if the operating cash flow on parallel went down on the earnings, then I could say, okay, it was really something which had to do with the financial crisis, that the business got worse. But in this case, it's like kind of contradiction here. So we are not sure yet about the cyclical state of this company. Of course, it's cyclical. Yeah, you see cyclical, but I'm just ignoring that. I'm just looking at the bare fundamentals here. And then we have, to me, it's not very cyclical, the stock first. So it came out of nowhere. This is more, it came out of nowhere stock, the cut of the dividends, because you can see here that the company was hit very hard. And now, contrary to the financial crisis, both cash flows and earnings went down. So the company really has a problem. You can also see here that the margins went down, revenues went down. And what do we see here? During the financial crisis, margins went down too. This is an indicator that they really faced some problems, and revenues also went down. So this is an indicator that they really had problem, that they are still cyclical in nature.
Either that or the fact that they bought 510 in November 2011. So acquisitions and mergers can do things like that to the graphs pretty easily. The total purchase price for 510 in November of 2011 was $25 million in cash. So
okay, that's nice to know, but it was in 2011 and we are looking at 29. But you're right. Things like that can always distort analysis like that. Suddenly the margin is totally different because they are just absorbed another company with different margins.
Yeah, and I'm looking at Wikipedia, so they might not have what happened in 2009.
You are looking at Wikipedia. This means you are cheating. I can't look at Wikipedia right now. So what's interesting? Don't worry, Chet. I'm not talking 1 hour about Adidas based on CPR. I'm just saying for Adidas, it's a cyclical stock. We can see it here. Sorry for mentioning it so late, but Adidas was hit very hard here, extraordinarily hard here. We can also see, by the way, that they already cut their dividends from 29 to 2010 due to the financial crisis. So it's also a sign that they are cyclical in nature. But here it was really, they were hit really hard because they had to close their stores and they couldn't sell so much. I know that they even didn't want to pay their rents anymore.
Well, with everybody stuck at
Adidas,
home.
and then there was an outcry in Germany. How can such a big company like Adidas not pay the rent anymore? And then they continued paying them the rents. So they really had a problem. And I think although they are cyclical in nature, we were not prepared for something like that. They were hit so hard because they needed the stationary retail, and they had to close their shops. And Adidas came out from nowhere. So, do we have some other companies?
How about Raytheon?
Raytheon. Okay, Raytheon. What's that?
Raytheon Technologies was the merger of Raytheon and United Technologies, which happened earlier this year. These were two big military industrial complex companies that have major contracts with the Department of Defense here in the United States and militaries all over the world. It's military industrial complex.
Okay. Normally, if you tell me just this, I would say, hey, this stock is safe because they have big orders coming from the government, and military is not so cyclical in nature, but more cyclical to world tension. and unfortunately we have these. But if I look at that, and you can see it here, look at the financial crisis. Okay, revenues went a little bit down, but margins were stable, and they did not cut the dividends. And now look what happened here.
Yeah.
Can you explain that? Because me, I can't.
Not really. I can share what I'm looking at on Seeking Alpha, and this is total return versus the S&P in blue for RTX over 10 years. Now, the merger of Raytheon and United Technologies happened right in the middle of the pandemic. So that is one thing that really hurt them.
Okay.
But I don't know how
Let's
that
see.
would affect the dividends going forward.
The dividends is just the final result. What's really important is this. What happened here? Why did the cash flows decrease so dramatically? And the earnings per share are exactly zero. So they did not post a loss, but not a win either. They are exactly zero. And sorry, I can't explain it. I'd had to dig a little bit deeper what happened here, because basically I would say that this stock shouldn't be neither cyclical nor hit by the pandemic. Maybe it is they just have a problem with the merger.
All right,
Wait.
I'm looking on Wikipedia again. And on July 28th of 2020, the company announced the cutting of over 8,000 jobs in its commercial aviation division. So they are not just a military industrial complex. They provide services to the entire airlines industry. And as we saw in the at the very beginning, domestic air travel just in the United States dropped 40%. So that really hit them hard.
Okay, now that makes sense. I'm just going to verify what you say. Let me load.
Here's a comment. Airbus and Boeing are big customers of Raytheon.
Okay. I'm just going to confirm that. Let's have a look into the different segments of this company. It's RTX, the symbol, huh?
Yes.
Raytheon, here it is. And then we can, where are the segments? Segment history. I increase the screen a little bit, and then that was too large. And then we have the different segments. So aerospace is the largest one, and probably you say that within the aerospace they have a lot of customers coming from the civil aerospace.
Right.
And this should be where they heavily suffer. Okay. It makes sense to me. Unfortunately, they cut their dividend. They cut their segments in a way that we can't see who are the customers. I thought maybe we can even see the customers. Sometimes it works. This time it doesn't.
Let me pull up my resources again. I have. Okay, you continue, and I'll see if I can find this.
Oh, I basically was already finished. I think. Let me see if there's still someone else.
There it is.
There are some comments.
So take a look at this. This is from CSI Market, which I've used before in some of the videos talking about semiconductors and things like that. And this website has a list of the customers. So Northrop Grumman, let's see. Well, not a whole lot, but RTN, Raytheon Company. Let's try RTX, customers and markets. There we go. Okay, so Danaher, Safeway, Target. So a lot of.
We have a comment here.
Go ahead.
There's someone helping us here. It's I think a citation of the management or a press release.
Right.
Aerospace division sales dropped 36%. So I think that weren't government orders, but from the civil area. Sales at engine producer, and this Pratt and Whitney seems to be an important customer, fell 32%. I also think that is due to civil customers. So I think that basically the reason, Chad, you mentioned civil orders going down. This will be the problem.
Let's show the other comment that he put in here. To offset the channel loss of demand, the company's aiming to cut costs by $2 billion. Wow.
Okay. Is there still Rightmove? Did Rightmove cut the dividends? Let us go ahead. Raytheon, I think we already talked a lot. Thanks, Frank, for helping us. There, Rightmove. Let's check it out. If I remember well, I wasn't aware that Rightmove. It's a company from Great Britain, I think, that they cut their dividends. Let's see. Software, internet services, they are booming. Oh yeah, they cut their dividends, obviously, and they have reason. They had reason to do though. You see that? Okay, let's make a little.
Did they though?
Sorry.
Okay, I'm looking at Seeking Alpha, and
oh yeah, do it. I will do this analysis.
Okay.
If the dividend cut came out of nowhere. So let's have a look at it. 29. So during the financial crisis, they paid dividends for the first time, and revenue went up a little bit, about, I would say, something like 8%, but their margins really increased, and this offset the revenue decrease. So they really coped very well. They did very well during the financial crisis. You can see it here, and they kept the dividends stable during the financial crisis. They did increase the dividends, but their management obviously often keeps dividends stable, and then they increase it. Nearly every second year, they increase dividends, then they keep them stable, then they increase dividends again. That's an interesting pattern. Maybe that's I don't know. I've never seen that before. At least I didn't. I don't remember. And then they have really a big problem, obviously, here. So revenues really go down, and margins too. So to me, first sight, it came out from nowhere. So it must be a problem regarding Rightmove, regarding the company. As always, if someone knows more than us, he's allowed to post a comment to help us. Did you already see something?
Not really.
Not really. So I'm
not familiar with the company. First off,
we don't need to explain everything, because we just promised to give you our first impression if the dividend cut came out from nowhere or not, and this came out from nowhere to me. Let's have a look. I just fact set if that can help us. So we have the different segments here, and this is the past. So you always see the past.
Yeah, that ends in December 19.
Yeah, the past was great. The past was great. We only have the full periods. We don't have the quarters here. Unfortunately, we don't have the quarters here. And this is the problem you will face with most financial websites. They neither give you the latest real data, so based on the last quarters. So if you see here on Dividend Stocks Cash, you already see that it goes down. It already went down. So this is already the past, and you can already see that the current situation is not so good, because you already see the dividend cut, you already see decreasing earnings, decreasing margins, you already see decreasing revenues. You can see that there is a problem regarding the past. And of course, we also have the estimates here, and then you can see that the problem even deepens regarding the current business year, the outlook of the current business year, and then we have this recovery. And if you look at a lot of financial websites, then you just see this. Nothing against FactSet. FactSet is great, but just this view I show you here doesn't give you a picture of any crisis at all of this company. So we can't tell you what's happening here for right move. We had to dig deeper, and we can't do that, unfortunately, right now.
And we do have one comment from Frank talking about the stock splits. Stock splits don't really affect the numbers that much. And I can show that with a look at the 5-year dividend yield of Rightmove, and it's pretty steady throughout those throughout the stock splits that they have. Let's see, when did that happen? So we had a stock split in 2018. Let's go to history. There we go. So two stock splits, a 4-for-1 in early 2018, and then a 1.25-to-1 in September of the same year. But as you can see in dividend yield, it didn't really affect things. So stock splits don't really have effect.
I give you another view. Can you give me the screen back, Chad? This is also from FactSet, and this might be a little bit more helpful just to close the investigation of this company. Here you have the past and you have the future for the company, and look at sales, for example. So sales really drop a lot from 290 million British pound, should be British pound, exactly, there's a pound symbol, to less than 200 million pounds. So you see that there's really a problem, and it concerns all segments. So obviously there's a problem. We should have to dig deeper there.
And Frank says there's no growth. I'm looking at those numbers. I wouldn't say that there's no growth, but I would say that there's a pause, because it drops from 289 to 195 and then back to 282. And then the estimates say by 2022, we will see another growth. We'll see growth again from 282 to 302. So the estimates are expecting the company to get back on track on growth in 2022 sometime, but it's going to be about a year before they can do that.
Okay. There's someone told that there was a spin. We close on Rightmove now, I think.
Yeah.
Just going back once more to the other stock, Raytheon. And someone said there was a spin-off of United Technologies.
United Technologies had to spin off at least one of their big sectors.
I know, right? Yeah.
To be able to merge with Raytheon, and I think somebody else swooped in and bought that up. I know it was in technology, but I can't remember what the details were.
Okay. But this doesn't explain, I think. No, this does not explain the dividend cut at all. If I look at the balance sheet, I can exclude that it has something to do with a spin-off, because then the balance should decrease, and that did not happen here. Okay, do we have still another stock? No, that's all.
Okay.
Then I think it's already. Do you still want to say some last words, Chad?
I think the main thing that I got from this investigation is the need to focus on fundamentals more than anything else. It drives home the fact that there are winners and losers in every market change, and we just need to be on guard for watching for those changes, and be able to adjust our strategy, adjust our purchases to compensate. As I was saying a little earlier, my own portfolio was focused on high dividend yield, and that was a big mistake. and I found out the hard way. Now I'm focused on total growth. Both dividend and price increases are what attract me to a stock. And the only way that a company can do that is if the fundamentals are sound. So let's see, we will share our COVID-19 dividend winners and losers file. And we'll share that, well, here in the comments. Let me put that out. Let's see, copy link. And here is a copy of the docs file that we have that you can dig through and see if you can find some gems. Just make sure you look at the entire picture of a stock. Don't just look at dividend growth, look at capital gains. Don't just look at capital gains, look at dividend history, things like that. And we already have people looking at it, so that's cool.
And I think what we also learned is that there are some stocks which are more or less complicated to analyze, and I think with Raytheon, we got a stock which was very difficult to analyze because Frank gave us another comment telling us more details about this spin-off with, how is the company called? How is it called? United Technologies. So if something like this happens, then maybe you need really to dig deeper.
Yeah.
Because these are exceptional things which are happening, and they can really bring a fundamental analysis into disarray. And so no screener can cope with that. And if that just happened now in March, and if management cut their dividends because of that, then you really have to read the annual report or some analysis on seeking alpha or wherever.
Stock market investing is not just about numbers. It's about the story of the companies. We got to understand the stories of the companies to get a good idea and an understanding of where that company came from and where it's going to go. We're investing today for the next 5 or 10 years. So what is the world going to look like in 5 or 10 years? That's what I'm focused on when I'm looking for new stocks.
Exactly. And here's already a comment for our next show. Can we in future make an example portfolio with young growth dividend stocks from your ideas? So it would be a very practical session that time. And then we really had to say, Chad, we really had to make a disclaimer that we do no recommendation here.
Yeah, I mean, I have been sharing my total growth investing ranking list for a while now, and I'm not a professional. This is just the list that I use. Let me actually bring it up and show it on the screen. This is the ranking list that I use to answer the question, what do I buy next? For anybody else, everybody's welcome to use it, to look at it. We've got a whole bunch of people looking at it right now, you can see, but these are just ideas that people can look at. If you want to follow the ranking list, that's fine. Otherwise, there's lots of other strategy options out there.
What we could also do is presenting our portfolios, if that's no secret. I've also shown mine on several locations. That might also be interesting for some viewers.
Yep, and you can create. Let's see. So if I apply my TGI list, so I've created my top total growth investing stock lists on dividendstocks.cash, and let's see. I'm ranking by dividend income. Let's rank by dividend growth so we can see the best ones. Applied Materials, I've done a video on. FMC, Domino's Pizza we talked about. Here's Global Payments. All of my favorite stocks here. But yeah, we can go over portfolios and ideas and suggestions for stocks to look at. They're not recommendations to buy. They're just, this is the ones that attracted us, that we bought, and here's how they've been doing. We can certainly do that.
Look, your spreadsheet is insane, Chad. Thanks, Cody. You made Chad happy.
Well, I don't think he
And
was talking about the TGI. I think he was talking about the COVID winners and losers.
he made me happy. I made the spreadsheet, not Chad. Okay, so just drop all your comments. What to cover next? You already gave us some ideas, and Chad. I will promise for chat that we won't do very long and theoretical audits, or how do we call presentations at the beginning of Corona anymore.
This is a live stream, and it's rather off the cuff because that's how we do it best, and the feedback is what drives the live stream. So
okay, I think we completed the hour now.
we have.
It's a full hour, so we
will
can
be keeping track of all of the comments that come in on the videos on all of our channels. We have a lot of different places to show. We are on Facebook. We are on YouTube. These are all of the channels that this live stream goes to. 1, 2, 3 Facebook pages, 1 Facebook group, 2 YouTube channels, and actually there's the Dividend Growth International Facebook page up here as well.
Mark Zuckerberg is also watching, by the way, our live stream.
Okay, that's cool.
He was already curious who's streaming to all his pages.
Okay, so we will be watching for what the news happens, and we will plan for next Sunday at 11 o'clock. Same stock time, same stock channel, to use the old Batman phrase.
Okay,
it's good.
Thanks for watching,
and we will talk to you later.
Wish you a nice evening or day. Bye bye.